A healthy diet consists of proteins, carbohydrates, minerals, salts, vitamins. It's a complete diet. Similarly, a complete equity portfolio has large caps, mid caps, and small caps in its portfolio. As per SEBI definition, the top 100 companies as per market capitalization are called as large caps. These are big, stable companies, seen economic cycle, and have a potential to give returns from a long-term perspective. Then, on the other hand, the next 150 companies, as per market capitalization, are called as mid cap, and post that, the next 250 companies are called as small cap. Mid caps and small caps have a potential of giving very high returns. They have a potential of becoming future large caps, but they are also very risky. When the economic downturn happens, the stock correction, especially in mid cap and small cap, is quite high. Now, a good combination of large cap, mid cap, and small cap is very important to create wealth from a long term perspective. Now, you have two options. Either you take large cap, mid cap, and small cap funds separately, or you can take one fund which has a combination of all three, which is like a flexi cap fund. A flexi cap fund has all the three market capitalization in just one fund. Now you might say, and I see a lot of investors getting confused between a flexi cap and a multi cap fund, because a multi cap also has large cap, mid cap, and a small cap allocation in its fund. The big difference in both of them is that in a multi cap fund, the fund manager has to take at least 25% large cap, at least 25% mid cap, at least 25% small cap in its portfolio. Vis-a-vis in a flexi cap fund, a fund manager has complete flexibility to decide whether to have more of large caps, more of mid caps, or more of small caps in its portfolio. We all know at different points of time, sometimes large caps are more favorable, sometimes mid and small are more favorable in terms of equity allocation. A fund manager has a discretion of adjusting the weights based on market scenarios. So if you're a first time investor planning to put in an equity mutual fund, there is no better fund than a flexi cap fund. But if you are a seasoned investor, build your portfolios in two ways. Your core portfolio should have flexi cap fund and also a multi cap fund, and your satellite portfolio, based on your risk appetite, you can have mid caps, small caps, and sectorial funds. Happy investing? Stay invested.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.